Hi guys, it's Joe Friday, and I thought I'd do this video on supply and demand. It's something I've been meaning to do for a while after I did my support and resistance video, just to show you guys the difference between supply and demand and support and resistance. I kind of touched on it in the support and resistance video, but I'm going to go into a little more detail here. It shouldn't be a long video. There's really not much to say about it. Just find a couple examples to show you the difference and what to look for and how you could use it to help you in your trading. So looking at SPX here, this is a daily chart, and supply and demand is basically areas or zones where we see big reactions as opposed to support and resistance. So like here, if I get my price level out, you'll see this here. This is just resistance, because you see numerous taps, broke through, failed, broke through, and then finally broke through. This is just simple resistance, and down here is just simply regular support. The difference is when you have a supply or a demand zone, is the reaction is going to be a lot more stark. So for instance, down here, you can see this is clearly a big reaction. You see the tail here. So this now is your supply zone, right? So next time this ever comes back down here, this is going to be a reaction zone. Now I interchange them once in a while. You'll see on my charts, I'll say supply resistance, demand support, but there is a difference between the two. I just use them interchangeably because it gets to be too much to differentiate. But for you guys to know the difference, it's important because when you're coming into a demand zone like this, it's more apt to react than it is coming into a regular support zone like this. In other words, you're going to get a bigger reaction. So you look for these points, usually at turns, where you see these tails. And they'll change because they create new demand and supply zones as price moves around. The markets are dynamic, so it's not set in stone that this is the only one there is. You can see there was one here a little bit. Not the biggest reaction, but enough where you can see this was support. Didn't really get in. It got in there, and then we got the bigger reaction. So this now is a demand zone, as you have down here. And then supply is really just the opposite. You're looking for a negative reaction. So here you can see this big tail here, right? This candle created this zone, and so you would just take a level, top of that candle, and you can either use the opening and closing price, or you can go down to the tail. It's not really an exact science. It's something you have to play with. And you can see, if we did that here, you look to the right of the chart, it comes up here and comes back, and then we get another reaction. So it wasn't a great initial reaction here, but you can see it just couldn't pierce through this zone. And on that last try, we got the big reaction. Now sometimes you'll get like one or two in a row, like you have here, and what you do is you draw your rectangle box. There's the close, there's the low, and you go to the right of the chart. And you'll see every time you come down here, reaction, come down here, reaction, come down here, reaction. Now we have a new zone here created. Oh. I lost my spot. Oh, here we go. All right, so so now there's a new zone here created. You can see we didn't really quite get there. So you have no way of knowing that until you get there. You'd be sitting here looking for a buy order, and it falls short. Well, now this now is the new zone. So you would take it from there to there, and then you take your drawing tool, and you go to the right of the chart. Now let's see if we can extend this and see if it goes all the way to the right, and let's see if we get another reaction there. We did right here, see? That's the same zone. I'm trying to pull it up here. That's the same zone, see? So when it came all the way down here, you got that big reaction. Then it came down, got another reaction, a little shy of it, but then we gapped right through it. So like I said, usually you get them at turns, at bottoms and tops. Here you see we have another one. And we're probably not going to get there anytime soon. And when you go down to the lower time frames, it's a lot more easy to spot because you have a lot more than you do on a daily. So let's say, let me clear the chart here for you. So let's start with an hour chart. So here you see we got a reaction right here. Now there's really, you look to the left of the chart, you always want to have like space between. You don't want to have it like right on top of each other. So you want to see, you know, a distance in time between these zones, or reactions, I should say, not the zone itself. So there's really nothing here that I would say I would consider a demand zone, but I would consider this one. So what I would do is I would put a box here, and this is your zone. Now again, you can see it fell short here, and this may have created a smaller zone. But again, you get the bottom of the close, and this is on obviously a 1 hour time frame. So you can see we had the big bounce here off of demand. Never really came back down here. We created this new zone, and so now this is the zone that is taking precedence. Although this one is still valid, it just needs to get to the one above first. Right, so here also you can see we have another one, and like I said, they're at these turns, right? So here you got that reaction. Take your box at the close or open, whatever is top of the bottom of the candle body, and you can see it just touched it, and boom. Now my line may be off here a hair, so. And you can use these not only for supply and demand, but you can use them for resistance, these ranges, because they're these zones really support and resistance are not exact precise levels. They're going to be areas. So when you use these zones, these boxes, they help you identify an area of interest rather than just an exact level, so that you don't sit there waiting to hit you know, an exact price, and it comes up short, or it goes past it a little bit, and you wind up missing out on a trade because you're looking for an exact level. So here you can see this is now, like I said, this is on the 1 hour chart. We have some demand zone. Been tested twice now. Next time it comes down, probably may or may not hold. Usually these demand zones 3 to 4 times max, although obviously there are exceptions. Most of the time they give way, because at each time it comes down, as I explained before, all the buyers here get eaten up. They get taken out. There's no more buyers. Price goes lower, and then you have these other buyers sitting down here. Now let's look at some 4-hour charts. Let's see if we can find a resistance zone, but nothing really killing me here. This one's all right. A little bit. Not really loving it. Not that much of a reaction. So let's see. And you could also just do 2 lines if you don't want to do a box. Or color them. You can see this really didn't work, right? Came back. And sometimes they don't work. Nothing 100%. You had the reaction, came back, kicked it again. Long time till it got up there again, but then it blew right through it. At least for a few days, and then it broke down again. So let's try the Dow. Okay, so let's try the Dow. I was going to clear all the price tags off. See if we find something here. Okay, so here again we have right now they're working on the they're working more on demand than they are supply. That's okay. So what you do is you see this reaction. You try to find the bottom of the candle body, and again you could do it as you like, but you just want to get the general principle. And you can see, came all the way down, boom, reaction. Didn't get the big tail, but we got pretty much a straight bounce. Now this here really isn't a supply zone per se, because you don't really have that big reaction. Really just this is just resistance. Let's see if I can find a supply zone here. Maybe we'll find it on the daily. Yeah, okay, so we got a little bit of one here. You can see right here. You had that one reaction, wasn't really that big, but starting from this candle here, see? And then you take your rectangle tool and you go to the right. Now you can see the reaction here, right? So it's a little off on the line, so it's a little bit higher than that, but when it came up here, boom, rejection, and the next time it broke through. And it goes back to, this is back in 2011, right? And then once it's invalidated, it's basically gone for the most part, unless a new one gets created, like here. But you can see it really didn't hold. Blew right through the second time around. But then a new one was created here, see? So if you didn't have this one here, you would have just created one right here yourself. So okay, this is the next zone. Comes down here, it's going to bounce, and there you have it. So it takes time, takes practice. You really just have to go through the charts. Like I said, this is if you want to do this for a living and you want to be profitable, you got to put the time in. And that means going through hours and hours and hours of charts and learning to read price action. And here is another one. You can see pretty much. Let me change that real quick here. And that's basically your zone. Let's see if it gets over. And like I said, you're not going to see a lot of reactions. You're only going to see a couple. Like this one here, maybe formed another one here in between. So there's nothing really to the right. So that was it. But for now, going forward now, you're going to have this as a zone to watch. And if it breaks through, well, then that's a bearish sign because you've broken through this demand zone where all these buyers were sitting and was priced higher. Once they get taken out, now this becomes your next zone. And again, the difference between supply and demand is really just the reactions off the levels. You see, this is all just resistance. You're not getting these big moves. Just one candle and back up. Here, you're a big move. We're right up. And this could actually be a supply zone right here. So if we get back up here, this is where you'll be looking to short, especially since we haven't been up there. This is back in June. Let me see, I haven't been up there since June. So we zoom out. Yeah, see, it was right here. Actually, it goes all the way back to here. This is what started it. Came up, rejected again. So next time, could get another rejection. Possible it breaks through. But you should be aware of these areas and the difference between regular support and resistance because there probably is more of a high probability trade because they usually occur at these swing highs and swing lows, and therefore you're apt to get a reaction more so than just at a regular resistance or support level. And then like anything else, like I say, you have to kind of take things in context and in conjunction with other things that are going on. So here you can see we came below the RSI moving average, and we got the reaction where this was really just a prior resistance. So these things just don't pop out of nowhere. Usually there's some prior level that got tested that created the zone, and then it turns into more of a important zone because then buyers start setting their buy levels here, looking for a retracement or whatever. And the same thing here. Sellers looking up here now for this next level to come so they can short, or maybe they want to exit their longs. So I try to look at everything in context. Here you can see you were hitting this supply zone, and we were very extended above this RSI moving average. And so, like I said, there's usually a reversion to the mean. And so, to me, this RSI moving average is always like a magnet. And once you get too far away, the odds favor it's going to come back down. And the RSI moving average is dynamic. Of course, it moves. So it may be here today and maybe a little higher the next day or two. So you got to take that into account. But if you start seeing it too far extended, it's going to come back, just like it did here. Go all the way down here, and you knew at some point, you didn't see it here because you don't see the right end of the chart. But if you're down here, you know that this moving average is all the way up here. Good chance we're coming back up to test this somewhere in time. And then you see we did get there. I mean, obviously the moving average moved a little lower, but it came all the way back up. And same thing on the way up, on the way down. And then it hovers around here, and then it decides to go up or go down. So here's another zone. You can see again, you can see all these reactions. But this is the one that created it. So it's kind of a big zone. You can see the tail. But each time we came down, boom, boom. And we haven't been down there yet, have we? Let me see here. You can see I'm doing this live here, so it's not like I pre-planned this. I'm just trying to show you how to do it. And here, it broke through, and then it bounced, and then it finally gave through. So sometimes they extend. Doesn't always going to stop at the bottom. And if you're sitting a buy order there, most of the time you try to jump in here and maybe layer in the middle, maybe another one on the bottom, and then you could always put a stop down here. If it pokes through, you stop out. Totally up to you how you want to trade. Again, here's another one that was created. So trying to see any others I could find for you. And like I said, it works on different time frames. Probably see it a lot on a 5-minute or a 15-minute chart. More so. So here you had a zone here. You got a couple of touches, and then it gave way. And this was another zone right here. Okay. Came back up, boom, and then it gave way. That can hold forever. Sometimes one touch, sometimes two touches. Sometimes they don't hold at all. But most of the time they do. I think you're good for at least two good reactions off a zone. At least that's what I look for. So, and it works also for currencies. So let's say Aussie US dollar. Let me see if I find the plain chart. See if I can find something here that's, well, there's a 15-minute, let me go to an hour. Okay, so you got one here. See? Came down. This one fell a little shy. Came down. One, boom, nice reaction. And that was it. This actually created a supply zone. I just got to go to the right, see if we get any more reactions. Nope, blew right through. I think that's the same one, right? Yeah. So that one didn't hold. That one went right through. And then it started acting as support, see? Came down here, and then it broke. Now this is another supply zone right here. So again, practice on your charts, pull up charts, and just try to go through these things. Try to find your support and resistance levels. Try to find your supply and demand levels. Here you can see you got here reaction, not a great reaction, and finally it gave way. But that's what happens, because as the sellers up here get eaten up, just like the buyers down here get eaten up, price will then pass through it as people bid the price higher, and they start chasing, and that's what makes the market, right? Here's another one you can see. This only worked once, it looks like. So here you came up, hit supply, came down, came up, broke through, kind of acting as resistance now, and now this actually started to make another supply zone. So if we ended it right there, let's say, we just started a new one here. Just go that way. I mean, you could take the whole candle, or you could just take the body, top of the body. And you can see here how well that worked, right? And I'm doing this all, live. I didn't pre-plan this. So reaction, boom, reaction, reaction, and then final reaction. And then we just sort of going lower. All right, here's the supply demand zone here. I would use the wider of the two candles, and you can see it didn't even work this time. Went right through. Went right through on that spike, but then the second time we got the bounce. So sometimes you get these overreactions on panic selling or panic buying. Here's another zone right here. And I don't think we've been up there yet to revisit it, so we don't know yet. At least I don't think so. Let me see. No, maybe we were. There you go. All right, so we're at 66.85. So this was basically it. So you see the reaction, and then it gave way. All right, so anyway, it's getting a little long. I just wanted to show you guys, and obviously, if you're coming into a demand zone or support and resistance, sometimes you can pick out, because you can also see, like I said, take everything in contact collectively, not in a vacuum, and you can see here we're coming into this zone, but we have a bullish divergence. So if you have a divergence and you're coming into a demand or support, it's always a high probability trade. Always. You got two technical pieces of evidence suggesting that you're going to see some type of reaction. So you have price, support, resistance, and you have a divergence, positive divergence. All right, so that's it. Hope you guys found this helpful. Again, practice. Just pull up charts and start drawing your zones, or whether you want to label them support and resistance, or just supply and demand, or both, whatever. It's up to you. But just know the difference, because it could make a difference in how much money you're going to make. You make a big reaction off a supply or a demand zone was going to yield you more profit than a simple, plain vanilla bounce of support or resistance. And that's why you got to kind of know the difference and try to look for those areas where you think you're going to get a significant reaction. So anyway, hope you found this helpful. And I'll add this to the library, and you guys can look at it and review it as many times as you like. Have a good night.